Greetings, traders. So, we finally got our 25 basis points rate cut, but the real question is, what's next? Last week was a big one. The Fed not only cut rates, but also announced that quantitative tightening will end in December. Why is that such a big deal? Because it basically opens the door for the Fed to start printing money again, injecting liquidity into the system, and artificially propping up the markets with lower interest rates. Sounds familiar, right? During the pandemic, they did the same thing, and we all know how that ended. Sky-high inflation. This economy feels like it's running on borrowed time, kicking again further down the road. The question is, which presidency will finally face the consequences? One thing's for sure, it won't be Wall Street paying the price. It'll be the everyday people. Now, alongside the FOMC event, we also had a few mega-cap earnings, a mixed bag overall. But there's growing concern that other tech giants might follow in Amazon's footsteps, which recently laid off 30,000 workers right before its earnings. This week, keep your eyes on AMD and Qualcomm. Their results will be crucial in determining whether the AI boom still has fuel left or if it's starting to cool off. On the news front, there's not much expected to shake the markets, apart from Tuesday's job openings data and Friday's October employment report. But keep in mind, those numbers might not even come out if the government shutdown continues. Now, let's jump into the technical side. As predicted in my last video, NASDAQ broke above 26,000 and even touched 26,399. Absolutely wild price action. The momentum is still strong, and I'd like to see if it can push above 26,500. However, for this week, I expect it to stay range-bound between 26,300 and 24,800. S&P 500 looks slightly weaker compared to NASDAQ. It missed my 7,000 target by just 50 points. Still, the bullish strength remains intact, with a possible range between 6,950 and 6,545. Lastly, the dollar index isn't looking terrible, but it's curling upward, forming what looks like a cup pattern, which could turn bearish. Watch for a retest near 100 before a potential breakdown back into the 100, 98.50 range. That's it for this week's analysis. Traders,